Hello, ladies and gentlemen. Good day and welcome to the show. Today is 27th, Monday the 27th of July, 2020. Thank you for joining in, and let's get started. Let's open up the charts right here. You know, things are not looking good in the United States. They're listing the eruptions of this civil unrest now has erupted in Seattle, Portland, Atlanta, Chicago, New York, Los Angeles, Oakland, Louisville, Austin, and in Richmond. All of these cities are under sustained protests right now. And they're saying that the chaos isn't going to disappear anytime soon. You see a picture here of what's going on. It's, I'm going to tell you, this is with the markets being buoyed right now. And that's creating a certain amount of calm within the Wall Street side of the economy. Well, the Main Street has fell, and these protests that we see are just a manifestation of what's happening on Main Street. But Wall Street's still holding up. As long as Wall Street's holding up, you know, but here's the thing. Wall Street's just barely hanging on by a thread. It's all ready to collapse. There's so much leverage in the system, and yet the Fed is pumping more leverage into the system. Bubbles always pop, guys. Bubbles always pop. Let's take a look at the gold price. Now, you know, last night when I seen certain little movements in the market, shook me up a little bit. I thought that things might be starting to make a downturn, and there might be some sort of a meltdown ongoing. I mean, but see, I'm looking for it right now because the conditions are primed for it. And so I'm sitting there watching. Now today I see the markets have stabilized, and the gold price and silver price have stabilized. Gold's at 1936. It's at its all-time high. It's right on its all-time high right now if it's not. And silver today, silver's at 24.20, and it's, you know, it's going along sideways right now, but it's made these gains and it's not losing them. Look at the price for silver. When's the last time you guys saw a price like that for silver? But listen, I'll tell you guys what. If we do get some sort of an event in the financial system, some sort of a meltdown starts within the financial system on any of these, look at this thing right here. This is what the financial system's like. I'm going to hone in on this so you guys can see this. Take a look at this. They changed. Let me go back. They changed this. See all the cogs and gears and levers? That's what the financial system is like. Just like that. Now, if one of these cogs breaks, the whole mechanism comes to a stop. You know, and that's what I was worried about last night. I was worried that one of the cogs might have broke. Well, maybe it hasn't yet, but it's ready to happen. It's ready to happen, guys. There's so much leverage in the system that any one of number of things could, in the money markets or in the mutual funds or it just goes on and on, the list of the corporate bond market or the, you know, or the repo market or the interbank lending and all this. It's just all these cogs, wheels, and levers. One of them breaks, and you know the system could roll over so bad it would go no bid. The markets could go no bid, and that means they could fall so fast that an ordinary person probably wouldn't even have time to get out. You just wake up the next morning and find the markets have keeled over, basically. Now, the Fed would have to rush in, and this is what they've been doing all along. When they see one of these cogs break, they rush in and they try to repair the damage. But it's been breaking here, there, and everywhere. It's like a dam that's ready to break, and all of all the water starts to break out one spot, they rush over and they repair that spot, and then it breaks out in another spot, and they're running around and they're scared right now. I've said it in my last shows. The Fed and the people that are in charge right now are scared. They know we're on the brink of something huge. And they're just like me. They're watching the system and they're like, where's it going to break next? Oh, honest to goodness, guys. Anyway, we are looking at a nice price for gold and silver, but here's the thing. We get some sort of a huge deflationary event within the system. One of these cogs or levers or wheels breaks, and the system starts to collapse. I don't know exactly which direction, because that's extremely deflationary. People panic, and they'll run to some asset class. I'm not absolutely sure that they'll run to gold and silver. You know, within a system that's like this, it's so out of whack. It's not a guarantee they'll run to gold and silver, but whatever they are going to sell, they're going to sell assets. So it's a little bit dangerous right now, putting all your eggs into gold and silver right now at these prices. A little bit dangerous. There is a volatility in the markets, and volatility can work both ways. Generally, when they say volatility, they're talking about a market falling. But volatility can work both ways. It can work to the upside and to the downside. There's a tremendous amount of volatility right now, not just in gold and silver, but in the whole market. And this is why we could have some sort of a meltdown start. And I'm not exactly sure which way gold and silver could swing in this. You'll be a little bit careful right now. Now, back when the prices, you didn't hear me telling you this, back when the prices was only like $17, I was like, hey, silver, look at silver, right? But right now, the price is $24.18. I'm a little bit like, hey, you know what? It's got room to the downside right now. Now, here's the thing. If it does go to the downside, it's going to be a very temporary measure. Probably only lasting a few days or weeks. And premiums will go up. And if we actually see that happen, the physical's going to sell out. If that were to happen. Now, I think there's a higher probability of it moving to the upside if we get some sort of a crash. And it could move to the upside with extreme vigor, like we saw last night. Even more so. So, I mean, the upside potential on gold and silver is unlimited. Downside risk is limited. But, you know, now that it's moved up to around $24, there is some downside there. So just want you guys to be aware of that. Take a look at cryptocurrency right now. $305 billion right now at 62.2% Bitcoin dominance. You see the Bitcoin dominance rising a little bit. This means that it might be slowing down the rally right now a little bit. But it's made its way over $10,000 right now, 10,313, and it's holding it. It's up 4% on the day so far. I don't like to see that Bitcoin dominance rise like this. To me, that's a bearish signal when the Bitcoin dominance rise. Now, in the last few days, I've been telling you there's a bullish signal, and we did see the price go from roughly 9,300 to 10,300. So that's about what? It's had about a 10% gain over the last few days. So that's pretty good, you know. Dow Jones Industrial Average today. Man, I'm telling you right now, this market has never been more oversold in the history of the market. On a lot of it on margin, you know, and a lot of it money that the Fed has created. And well, the old saying, if you're in this market and you're a Robin Hood trader and everything right now, you know, easy come, easy go. That's the old saying, easy come, easy go. You're walking on quicksand right now with this thing. I'm telling you, with this Dow Jones, you're walking on quicksand. Let's take a look at crude oil right now. $40.68. It's down 61 cents on the day, or 1.48%. Bonds and rates right now. We're looking at, on the long end, we're looking at the yield still falling again. You know, we're looking at a 10-year at 0.58. and we're looking at a 30-year at 1.22, you're losing money on these things because you're on a 30-year, for instance, 30-year treasury, only making 1.2% interest. Inflation's going to be moving faster than that. And so you're actually losing purchasing power by buying into U.S. treasuries. The history has shown that gold and silver will not lose purchasing power. They maintain your purchasing power. This has been shown through history that gold and silver will maintain your purchasing power. And so these treasuries, I don't consider them any sort of a bargain whatsoever. Let's take a look at the U.S. dollar index, 93.69. And we've been watching this dollar descend down when it was like 98, 99, 100. Now it's 93.69 and falling all day today. It's been falling, the dollar. Listen, thank you guys for listening to my show. Like and subscribe. Give me a thumbs up. We'll catch you guys in the very next episode. Bye-bye.